Hello all and good afternoon to everyone that is currently tuned in live with us on another episode of Phillip Trading Podcast. I'm your host for today and my name is Yongxian. So with me here today is Mr. Frank from ICE Exchange, which is the head of business development financial derivatives. How are you today, Mr. Frank?
Hey, good afternoon, and thanks for having me today to talk about these quite exciting new contracts.
Okay, great. Nice to hear that. So for today's podcast, we will be discussing on the topic regarding Micro Asia Tech30 Index Futures. So to all of our audience who are currently investing in any tech companies or any index, if you are interested, do not miss out this podcast. So I also would like to help all of our beloved audience today to share this video to all your friends. So the more people that are watching this video, the more we are able to motivate to deliver the greater content to all of you. And so without further ado, let's jump into our topic for today. So today we will be focusing on Micro Asia Tech30 Index Futures offered by ICE Exchange. So for the first questions to you, Mr. Frank, can you share more about what is Micro Asia Tech30 Index Futures?
Yes, for sure. Maybe I'd like to take a minute to introduce who we are. So as an exchange, you may know us as an American exchange, but we also have a local presence. In fact, we operate a fast-growing and multi-asset exchange since 2015 in Singapore. We have a wide range of contracts trading from Bitcoin to commodity contracts and more recently, equity index futures. As you can see, we launched equity index futures fairly recently in April 2021, and the contracts that we're going to talk about today already made it in the top 5 contract most traded on our platform, the Micro Asia Tech30 Index Futures. So maybe I can start by talking a bit about the index. So put simply, the Asia Tech30 Index is the benchmark, a regional benchmark for technology stocks. So breaking it down, regional tech index. So regional, because we believe that we should be looking at the tech sector regionally, holistically, because it represents opportunities. So when you look actually at the rankings of the top tech stocks in the world, 4 of them are based in Asia, right? So you have Alibaba and Tencent in China, you have Samsung in South Korea, and TSMC in Taiwan. So we believe that we need to represent the full set of opportunities for APAC tech stocks. The second part is actually to bring diversification to a trading strategy. So not only focusing on one single country, but looking again across country to mitigate specific country risk. And we've seen in the past, some local regulators or government enforcing strict regulation to its tech sector. So by looking holistically at the whole region, we bring diversification. So regional technology is a very important concept as well that we're trying to bring in this index. As you can see in that index methodology overview, we not only look at the technology sector, but because technology is embedded in also media and communications, and as well as consumer discretionary, we take into account, I would say, the activities that are relevant and that are part of a comprehensive representation of technology. You can see media and communication stocks that are included would be the likes of social media, online gaming, and consumer electronics alike. So the result of that process is an index that tracks the performance of long-established blue chip stocks, such as Sony in Japan, but as well newly listed stocks like Gojek in Indonesia. So it represents really the full spectrum of technology opportunities. So that was a very important concept that we wanted to take into account. And the third part, it's an index. So it's simply put, an index is a simple way to approach and allocate to a very specific risk return profile. So a passive index-based approach is bringing things like access to a whole universe of stocks. And we cover all the exchanges in the region, from the Tokyo Stock Exchange to the Jakarta Stock Exchange to the Hong Kong X. So we cover the full spectrum of exchanges in the region. It brings as well standardization. So the index is rule-based. So we'll be looking at all the top companies in APAC that match the sector and activity criteria, and we will be taking the top one per market capitalization. And finally, an index is dynamic. So we rebalance that technology index every quarter. So what does that mean? That means that we can catch up with the pace of IPOs in the region. So this year, we had two big tech IPOs, namely LG Energy Solutions in South Korea in January, the battery maker. And more recently, as I mentioned, in April, we had Gojek in Indonesia, which is Indonesia's biggest tech company. So both of these securities will be included after the next rebalancing that should take place by the end of June. So I think it's quite important, to explain what comes into the index and what we're trying to do with regional tech index. So every part of that definition is quite important. With this slide, I just wanted to cover what I just mentioned in terms of comprehensive representation of tech. So you can see in terms of sector weightings that we go beyond the simple tech sector, including the different sub-industries that I mentioned, consumer electronics and social media. And the opportunity set that is covered is actually some of the biggest themes at the moment: 5G development, digital information technologies such as big data, and all the green tech elements such as LG Electronics with the EV batteries. So that's, in a nutshell, what the Asia Tech30 index is about, a regional tech benchmark.
Okay, wow. So mainly the Asia Tech, it's about like to access the universal stock. Yeah, it's great. Wow, it's huge. Okay. So since you have shared about Micro Asia Tech 30, I also wanted to know, like, how is it correlate with other Asia index?
Thank you. Yeah, that's quite interesting. So maybe I can share with you an overview of the performance of the index over the last 5 years. I think it's very visual, the diversification effect that you achieve by taking into account, the full spectrum of stocks, tech stocks in the region. So first off, we compare the performance of the ICE Asia Tech 30 index with two very established indices. So first, the Hang Seng Tech Index, which is the technology index tracking Hong Kong listed shares. And then you have the MSCI AC Asia Pacific, which is the major benchmark for emerging and developed equities in Asia Pacific. As you can see in the top right corner, we'll be looking at the incremental returns over the last 5 years, 2017 to date, right? So the performance that you will be looking at in 2017, it's the performance over that specific year. So I wanted to break it down because it really represents the diversification effect at play. So in down years, such as 2018 and 2021, as you can see in your top right corner, in down years, diversification reduces the drain on the compounded performance, i.e., a broader multi-regional index would have less dependency to country-specific risk and to even economic specific risk. So taking last year as an example, 2021, the index, the ICE Asia Tech Index 30 was down 8% that year, compared to an Hang Seng Tech Index, which was down 33% that year due to very specific country risks. Then in up years, because the index is focused on a fast growing sector, the tech sector, which has a higher beta to the wider markets, the returns for that specific year will be enhanced, right? So the performance will be higher, for instance, in up years than the broader equity index. If we take 2020, for instance, the ICE Asia Tech30 was up 46% compared to a 17% for the MSCI AC Pacific, Asia Pacific. So what does that mean? It means actually that it's a much more balanced way and diversified risk to trade a higher beta sector. So it's quite interesting to put this into perspective. And as sources of diversification that you can see in this index, the countries, the currencies, right? Because all the Asia Pacific currencies are included in the index, then converted into US dollar. What you're trading is a simple US dollar denominated index. In addition to that, you have a security capping that's applied so that you don't have one security kind of overtaking and impacting massively the whole of the index. So it's a 525 capping so that you know that at each rebalancing, each security will not be over 25% of the index. So that's in a nutshell the performance of the index and how it's positioned amongst the different indices available in Asia Pacific.
Okay, great. So it's balanced it out throughout the whole indexes. Okay, so since we also have shared about in details about microtech and also how is it correlate with other Asia index. So what do you think? What are your market outlook for the Asia Tech 30?
Yeah, thank you. I think what we see today, and I'm going to put as a background this slide that represents the composition of the index, which is pro forma. So it's what the index would look like upon reconstitution post rebalancing. You can see at the bottom, the highlighted in yellow, the stocks that will be added to the index. As mentioned before, Gojek, LG Energy Solution, and also two Japanese stocks, Renesas and Nexon. So today, as we see most of the countries, coming to the other side of the global pandemic, we have macroeconomic factors that are directly affecting the tech sector, namely supply chain constraints, namely rising interest rates and rising inflations, all of which are impacting the valuation of tech stocks. So while investors might temporarily be cooling down on some of the tech names, the fundamentals of the largest tech companies are still strong, especially in Asia. You can see on the right side of this slide the primary exchanges, the breakdown of the index per primary exchange, and looking at the opportunities for the main blocks represented in the index. The outlook remains positive. When you take Taiwanese and South Korean companies, together they make about 40% of the index. So those companies account for the bulk of global processor chip production and memory chips that you can find in all the cell phone devices. It's components that power all the common devices used daily. And the demand is very, very strong for all of those. And just this week, despite the macroeconomic climate, we've seen TSMC announce a projection of revenue to grow about 30% in 2022, despite the macroeconomic context. So that's very encouraging. In Japan, Japanese companies make up about 24% of the Asia Tech Index. The nature of the tech companies over there, it's mostly established electronic goods manufacturers, such as Sony. And Sony as well is one of the companies that has been robust in the downturn. In fact, in May, they also announced record profits. Then you have the case of Chinese companies, as you can see Hong Kong listed companies make up about 36.5% of the index. And we've recently seen the government announcing a possible softening in the country's stance towards their flagship internet firms. So it's looking on the bright side as well on this front. So I would say that the challenge for investors in that context, looking holistically at the sector, is actually to identify those companies that will perform better and how they can diversify their risk in an efficient way. And that's the value that we try to bring to the markets with the micro futures that we have listed on ICE Singapore. It's a simple way to track an index that we believe has an interesting risk return profile.
Okay, so since because Asia Tech mostly takes out by Asia company, yes, of course, because it's under Asia. So for traders, they will also need to know which company has better performance. Yeah. So so from here, what do you think? I mean, like, what can traders do to capitalize on the strength of the Micro Asia Tech 30 index?
Yeah, that's a very interesting question, because it's a matter of market access, tradability of the futures and accessibility, and it's something that we really focus on with those futures. So as I mentioned, they are listed on our local exchange, and the futures are designed to be nimble and simple. Nimble because when we size the contract, we wanted them to be micro size. So currently they're about $7,500 per contract. So a very granular exposure to that specific sector. You can have great capital efficiency that's brought by margining. So currently the initial margin for the contracts is around 6%, which is $440. So nimble in size, simple. Again, as I mentioned, you are trading a US denominated future on a US denominated index. You can trade it throughout the Singapore session. So currently opens at 9 a.m. You have market makers who are posting 2 ways on screen. So one can trade in either direction intraday. Year to date, in terms of liquidity, it's been around $9 million US. So the liquidity has definitely increased over the last 6 months. So $9 million is around 1,200 lots. And we see that liquidity developing even further. Actually, I'm very pleased that this week we will be opening to the Taiwanese market. So we just received approval for distribution into Taiwan. So that should even further develop the liquidity in this specific contract. So how to effectively use the contract? It's intraday trading that can be done on screen, very nimble size, and fairly rapidly growing liquidity in the contracts.
Okay, yeah, so great. So intraday trading, nimble in size, and liquidity in the contract will be how the traders could capitalize on the strength of the Micro Asia Tech. Okay, great.
That's correct.
Thank you. Okay, great. Thank you for sharing, and I hope it will help the new investors out there to invest in the ICE Exchange Micro Asia Tech 30 Index. And now we have come to an end for our today's podcast. If you have any questions or any topics you want us to discuss next week, you can leave a message in the comment box below. And thank you for listening to our podcast, and happy trading for the week. So thank you for your time to Mr. Frank. Thank you. Bye-bye. Have
Thank
a
you so
nice
much.
day.
Thank you. Bye.